Welcome back, everyone. In this video, I'm going to show you how to use the OTE, the Optimum Trade Entry. Now, this entry model can be used for any asset class. It can be used in the crypto market, can be used in the forex market, can also be used in the indices. I've been able to simplify these entry models into rules, clear, simple rules that you can see on your chart to be able to identify a trade opportunity. For simplicity, I've been able to group these rules into conditions, entry, stop, and take profit. So for conditions, you want to see this pattern occur at an institutional level in a higher time frame. So it could either be an order block, a breakout block, or a fair value gap. So what you do next, you go down to a smaller time frame, which is the 5-minute time frame. So it's not just any small time frame, the 5-minute time frame. You want your rules to be as objective as possible so that you don't think in the marketplace. When you begin to think in the marketplace, it can lead to emotional bias. Okay. This is specifically for day traders. But if you are swing trading this strategy, you want to take the time frame higher. Now I'll leave a link to a video explaining what time frames to use with your style of trading. So after identifying a 1-hour order block or fair value gap or breakout block, you want to go down to a 5-minute time frame. All you're looking for is a market shift. A market shift is when there's a break of structure. All right, so it looks like this. Let's assume there's an order block here, a 1-hour bullish order block. Okay, as soon as price hits it, it creates a swing high and then hits it. Then one price breaks this high, we call it a market structure shift because there's a break of structure. A break of structure proves to us that the price has shifted from bullish to bearish or bearish to bullish. Okay. Now, once you've done that, you want to pull out your fib. You draw from the low to the high. And then at the 62% level is where you want to be buying. This is 0.62 or 62% level. That's where you'll be entering. All right. Now you want to make sure that this is occurring at either of the Q zones, the London, the New York, or the Asian Q zone, depending on what pair you're trading. Then you want to place your stop at the 1 fib level. That is where you began drawing the fib. So this is where we start drawing the fib. So at this level is where you want to put your stop loss. All right. And you also want to have a maximum stop loss because most times there are news that will be released that will increase the price range. So you don't want to be trading with huge stop losses. Okay, so your take profit, you could either use the 3R or 1 extension. So what does that mean? I'll show you guys the figures for this Fibonacci. 1 extension is above your entry price. So this is the 1 extension. You want to be putting your target here, or you want to use the 3R. 3R means if you're risking 1%, you gain 3%. All right, so let's look at an example quickly. So here's the EURUSD, here's the 1-hour time frame. This strategy occurred today. This is the 10th of November. All right, so we could see this low price failed to take this low, but it's something we call the SMT divergence. This occurs between correlated assets. If you want to learn more about the SMT divergence, I'll leave a link in the description of this video. Okay, so we'll go to the British Pound USD. Same spot, you can see that this low was taken by this swing low here. So liquidity was taken here, but the EURUSD liquidity wasn't taken. So we have the SMT divergence. Another way you could also know is you come here, you click on this tool, this plus sign, and then you click on new plane. You'll be able to compare two assets that are correlated. So you can see that there is divergence. Euro failed to make a lower low, but British pound made a lower low. So we consider this a sweep of liquidity. All right. So what we want to do next is go down to the 5-minute time frame. So at this point, we could see here, this is the low formed. All right. And then we can see a market shift because it broke this high. This is a break of market structure. I consider this as a break of market structure because it broke above this swing high. This is the last leg that took liquidity. Okay, we can't see liquidity being taken here, but we can see it in British pounds, USD. So as soon as this formed, we want to locate the high. Where this leg started from here, started from this point. How can we locate the high? I call it a 3-candle pattern. This candle at the middle is higher than both candles at the left and the candle at the right. All right, so there's a swing high. Now, as soon as this candle breaks this high, we want to start drawing our fib. So we draw a fib from this level, this low, so this high, okay? And we're entering at the 62% level. Here's the 1, 62, and then this. So here's where we're entering. Here will be our stop loss. And then here will be our take profit. This -1 extension. or you want to use 3R. If you use 3R, this is where you'll be taking a profit, which is a nice trade. Let's look at another example. Let's go to the BTC. Okay, I think what we'll do is I would just take it back. This happened yesterday. That's on the 9th of November. So I'll just take this out. So we'll see what happened from the highest time frame. So in the 4-hour time frame, you could see the price is finding support at this bullish order block. So I'll just draw it out. Here's a bullish order block. Price broke structure. So here's a market shift in the 4-hour time frame. Market shift from bearish to bullish because it broke this high. You can see an area of inefficiency as price filled it in. Okay, so we'll go down to the 1-hour time frame. So each of this line represents a particular day. So here's a Thursday, here's a Friday, this is Saturday. So let's move further. And then this is a Sunday. All right, so you know BTC plays Saturdays and Sundays, and not the forex market. So you could see that price took out liquidity in the Asian session. All right, so this happened here. Now we're going to go down to the 5-minute time frame. All right, so I think I'll just take it back as soon as this happened. Just so that you don't get confused. This is our order block. Let's go back so that everything is clearly seen. This is our order block. I think I should make it 2 tick. So here's the order block, and then here's the run on liquidity. So we're going down to the 1-hour time frame. Okay, you can see how price took liquidity. All right, so run on liquidity is also an institutional level, same as another block, a breakout block, and fair value gap. Okay, so we'll go down to the 5-minute time frame. So let's not forget, here's our bullish order block. So I'll just pull it to this level. And then let's play price. All we're waiting for is a break of structure, which indicates market shifts. So we're looking to see this high broken. Why this high? Because this is the last swing that took liquidity. This is the last swing, and it began here. How did we know it began from here? Because the 3-candle pattern is being formed. This candle at the middle is higher than the candle by the left, candle by the right. So waiting for this high to be broken. Once this high is broken, we have a market shift. Good, we have a market shift now. So what we do is we want to draw our Fibonacci from here to this point and then keep playing price. Our price got to 62% level, but this is outside the Q zone, so we don't want to take this trade. We want to wait to see if it gets to it in London. Good, we have it is in London, so we're going to extend our Fibonacci. Here we'll be entering, so let's buy. We're buying here, I'll stop here at this level. Remember, this is our London Q zone, and then we are aiming for 3 Rs, or we aim for the -1 extension level here. So let's see how this trade plays. And there you have it. So this is why this is 4.24 hours. Now, the last example, which is the NASDAQ. This happened today again. So let's go down to the 1-hour time frame. So I think I should take this back. You'll see that at this point, this is the 1-hour time frame. At this point, you can see the fair value gap. And this is our higher time frame institutional level. We're waiting for price to get to this level. Once it gets to this level, go down to the 5-minute time frame to look for our entry pattern. Good. Now we can see this. So we're going down to the 5-minute time frame. All right. As soon as this happens, I think I should take it back. Once price dips into this fair value gap, we want to highlight our swing high. Why is this a swing high? This is the last swing that fell into this fair value gap, and it began here. The candle in the middle is higher than both candles by the left and the right. So we're waiting for this high to be broken. Once this high is broken, it indicates the market structure shift. So I'm going to play and wait to see if it gets broken. Good. Got broken here. So I'm going to draw my fib from here to this point, and we can see how price got to this level, this is 2% level. But we can't take a trade because outside the Q zone. So we're going to wait to see. All right, so at New York, we're waiting to see if price still gets back to this level. Good, it did. So we're going to draw a fib from here. I'll stop here. And then we're aiming for, -1 extension, or we can also aim for 3 hours. So I'm going to play and see what happens. Good. You see, we could hit the target. Now, usually I don't like trading NASDAQ outside the 930 window. So another thing you could do is you draw out your fib to this level. Okay. Because we take all this swing as one price range. All right. So if you extend the fib to this level, you can see that price got, I think, let me get the level properly. You can see that price got to the 60% level here. Here's the 9:30 a.m. window. So this is where I'll be entering because I use the 9:30. I don't trade the NASDAQ outside 9:30 to 3 p.m. So here are the levels of the Fibonacci. If you want to use the strategy, feel free to include them in your fib settings. All right, I hope this was helpful. Please, if you enjoyed this video, give it a thumbs up. And if you wish to see more of my videos, please do subscribe. See you guys next week.